Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching Easynomics. As we count down to budget day, the one issue that economists agree on is the need to push consumption across India to spur demand in the economy. But it is easier said than done. Finance Minister Nirmala Sitharaman has the difficult task of balancing growth while maintaining fiscal discipline. So, what are the options that the Modi government can adopt and opt for this time around? I am joined by noted economists on the subject, Soumya Kanti Ghosh, Chief Economist at India's largest bank, the State Bank of India, Rumki Majumdar, economist at Deloitte, and Dhiraj Nayyar, Chief Economist at one of India's largest conglomerates, Vedanta. Welcome to the show. I'm going to begin with you, Dhiraj, to put things in context for our viewers. What is the state of the Indian economy as we head into the budget week?
Well, I think, as we all know, there is a bit of a slowdown in terms of GDP growth overall. But what we've been seeing for the last few quarters is muted consumption growth. And we all know that consumption is by far the largest contributor to India's GDP. So I think, as we go into the budget, you have one engine, consumption, which is clearly muted. Private investment has been muted for a while. Exports, which is the third engine for growth, may gain a little from the fall in the rupee, but then we have Donald Trump, threatening tariffs on Indian exports. So there's a lot of uncertainty around, the main engines of growth. I guess the one engine which we can expect certain certainty on is government spending, government investment spending, which has been high during the term of this government and which may further go up. But that is the primary engine firing. We need at least one or two more engines firing. And I think there is no option but to have the consumption engine firing, given how big it is as a part of our GDP, and of course, a private investment as well. So I think looking at a budget which needs to look at boosting private consumption and private investment. Not everything is strictly budget related, but a budget is a good time to make a statement, to make an intent, and to lay out a vision at a time when growth is a little muted.
Rumki, I'll come to you on that very point. Is fixing the consumption part of the economy the key policy intervention that is required at this point of time?
So I think what is important is to make the consumption more broad based. So while we have seen rural economy to be doing better, given that the agriculture output has been good, so rural demand might sustain for a few quarters. The urban demand also needs a bit of a push because it's been moderating. But the good news is that there is one segment of the population which is spending, and most likely the government will come up with creation by creating employment, which kind of boosts the urban demand and urban income. Services sector has done exceptionally well. So it is one of the biggest drivers of the GDP. Now its export has done amazingly well. If the government can come up with incentives to boost services, especially in the GCCs, and also ensure that we kind of branch out beyond and through digitization and technology to boost services sector growth, I think the urban demand will also be quite stronger. So broader and of course inflation. That is another check that the government has to make sure that inflation comes down, which impacts consumers directly.
Soumya Kanti, coming to you, you heard the two speakers, colleague economists before you, but with key drivers of the economy seeming to be in a weaker state than before, one of the other questions that has been raised is India in a structural slowdown? Some people tend to believe that yes, that is indeed the case. Others say no, it's a cyclical slowdown. Where do you stand on the debate, and how would you expect the budget to intervene in the current state of the economy?
Yeah, thank you, Zarabi, for having me on the show. I think I'll not get into this fancy term structural, cyclical, which are put out by economists just to be a little bit on the harsh side, just to get attentions. So my primary point is that if I give you two sets of data, from 2004 to 14, India's GDP growth rate, average GDP growth rate was 7.2% if we exclude the global financial crisis. And from 2014 to 24, India's average growth rate, 40 to 25, in fact, his average growth rate is at 7.3%, which again excludes the pandemic year. And from 91 till 2025, India's average growth is 6.1%. So we had a 30-year growth rate of 6.1%. We have a 10-year growth rate just before this decade of 7.2. Remarkably similar growth rate of 7.3%. So when the growth rate moves down from 7.3% to say less than 6%, but that on a quarterly basis, of course, that is disappointing. But having said that, I think even if we grow, say, at the 6.4%, as the CSO has said, maybe there could be some downside to it, we estimate. And next year, the growth rate could be anywhere between 6 to 6.5%. I think still believe we will be doing significantly better than most of the other economies. The only thing is that this growth rate, and even if we say growth go at this rate, and if the growth rate say growth inches up beyond 6.5%, I think that's also a very satisfactory growth rate. The only point of concern, if you ask me, that leaving aside the terms like structural and cyclical, I think that consumption demand has been, there has been concerns of saying that consumption demand is broad-based. In my sense, what is happening to the consumption is that consumption is more happening at the bottom of the pyramid because of the numerous government initiatives which has been happening. And since it is happening at the bottom of the pyramid, so that's why it may not have an exponential push on the overall consumption levels. So from that point of view, the consumption growth rate which we are looking into may not look that good. But my sense is that there could be some amount of consumption boost in the budget just to ensure that the growth rate of 7%, which we had last year, is sustained. Or the private investment has been now, we are talking about on private investment now for a long time. My sense is that the private investment this year number could be more than 33%. The point of concern, so basically, if I cut the long story short, the point of concern is basically ensuring that the 7% consumption growth is sustained on a continuous basis, so that we are able to hit this brand of 6.5% to 7% on a continuous basis. Right now, the trend actually has moved down to between 6 to 6.5%. So I will not call it a structural slowdown or a cyclical slowdown. I'll just call it that maybe a mean reverting and nothing more into it.
Dhiraj, you heard Soumya Kanti. I want to add some other comments that have been made in the run to the budget by various people, including the fact that at one end of the economy, the upper end, there is this illusion of a boom due to the higher end, less than 1% of the population continuing to spend very well. But at the lower end, especially in rural India, discretionary spending is markedly lower, and by all metrics, including certain fast moving metrics, it's clear that that end of the economy is not spending as much as it was before. You agree with Soumya Kanti's prescription, and what would you add to it that requires policymakers' attention at this stage?
No, I think everyone has agreed that there should be some boost given to consumption, and I suspect again, where you're looking at a boost is in the middle class. It's a nebulous term, but probably again in urban people living in urban areas, not necessarily tier 1, but tier 2, tier 3 cities. I agree with Soumya Kanti to the extent that the lowest segment is probably spending, but their spending doesn't have that impact on GDP growth. So I think you need the middle segment spending more. And I think they are the ones spending less, partly because of inflation, of course. But I think in general, because of the slowdown. And I think in the upper segment as well, you may see some slowdown with the amount of reduction. There's been a correction. There's been in the stock market as well. But I think the main target for policymakers in the budget has to be the middle segment. That clearly needs to spend more. And I suspect if they spend more and if demand grows, then you will see private investment also go up. So I think what we have at the moment is a demand demand sluggishness, which can be addressed one by, of course, maybe cutting taxes. GST is not within the purview of the budget, but direct taxes, and I think a certain push back up towards to public investment, which the government had kind of paused on. Well, pause is a strong word, but had gone relatively slow on in the last year, which was also an election year. So I think a mixture of a public investment boost and a private consumption boost would certainly get the economy to a 6.5 to 7% rate in the short run, growth rate in the short run. I think if the RBI responds as well in February with a cut in the interest rates, I think you'll find that the term structural and cyclical may not be so valid. It may just be a quarter or two of slowdown, and we'll see an upswing again. But I think some actions definitely need to be taken. It's not going to happen automatically.
Rumki, overall tax collections, both on the direct and indirect tax side, have been healthy, and this is a multi-year trend that we have been seeing. Similarly, we have also seen an overall increase in welfare spending. The question I have for you is there fiscal headroom for the government without sacrificing its multi-year path of fiscal deficit to spend more for in the near future?
But the government has been extremely prudent about where it spends, and I think what the government has done is spend more, which has more long-term benefit, long-term returns, and has more capability of creating income and employment. I think that headroom India government has, and it will continue to do so. So it will keep its accelerating its effort towards capex. And this year we expect that capex spending will be boosted. There will be some direct benefit transfers also happening to ensure that the rural income is supported and consumption is continues. But I think government will strongly will make sure that it strongly follows the path of consolidation, because that gives the global investors the confidence that India has control over its finances. And this is something which I have been saying before as well, that over the years, government has steadily reduced its fiscal deficit, and it will ensure that this year also it adheres to the fiscal deficit and the next year as well, because that will it will keep a control over inflation. It will ensure that the expenses do not crowd out private investment. So there is headroom, but it will be very prudent. Government will be very prudent in spending in capex rather than in revenue expenditure. So clearly, it will be a more spending towards creating employment and income.
Soumya Kanti, this mention of GST came up, and just to once again remind our viewers, GST out of the purview of the budget, but there is a federal body, a very powerful one, the GST Council, which should look at those matters. Beyond the budget, is it also time for the GST Council to address some of the pending issues, Soumya Kanti, in terms of the structure and rates, which seem to be impacting the rural poor quite significantly?
Yeah, before I answer that question, I just want to add a point on fiscal consolidation. I think every time when the budget is presented, there is a discussion on fiscal consolidation, but I find it rather surprising and strange that if you look into economies which has pulled them out of this pandemic, one of them is the USA today. The USA basically, we call it the US exceptionalism. And even today, the US actually is running at a growth rate which is close to between 2.5 to 3%. And that was because of excessive fiscal spending. Of course, that pushed up the inflation. But for a country like India, I think instead of continuously focusing on consolidation, I think it's we have done quite well, pushed the deficit from 9.2 to below 5%. And my sense is that there is no harm if we just go a little bit slow on consolidation, maybe at 4.56 or 4.7%, and hitting the target 4.5% next year, because that will actually give the government a lot of headway in terms of pushing capital expenditure, as also trying to give some sort of an income boost to the salaried class. Now, having said that, one of the interesting propositions which I would like to say is that if you do an technical analysis of GST, you will actually find that consumption is more elastic to a cut in indirect taxes rather than a direct taxes, because direct taxes is always supposed to be regressive. Indirect taxes is always supposed to be regressive in nature by its typical, I mean, structure it across all countries, because it's the same across all segments of the population. So by that logic and the elasticity of indirect taxes, if we just do a simple exercise of cutting GST, we'll find that the elasticity of indirect taxes to a propensity to consume is much higher than the direct taxes. But that is not outside the purview of the within the budget. So I agree with the view that the time has possibly come to maybe simplify the GST structure. For point number two, usually in a GST2 reform, which is not inside the budget, but the budget can actually give a hint that we are going to have a GST2 roadmap, whereby you bring electricity into within GST and over a point of time get the fuel under GST, because you have a GST tax structure today in the country, and you can't have 29 different fuel rates across the country, across 29 different states. I think that simply is not done. So my sense, and actually our research also shows that given the base of GST actually has been significantly widened, even if you bring petroleum under GST, which say at the highest level is some amount of cess sharing across the states, I think that the revenue loss to the center and the states will not be that significant. So from that perspective, it is outside the purview of the budget, but the budget can always say that we want to lay a roadmap of GST2, just like the direct tax code, which is going to be implemented in the budget.
Dhiraj Nayyar, the point around freebies and our electoral cycle ensuring that every state election we are seeing a new round of freebies being announced, at times that seems to mask one of the other facets of our welfare spending. That if you take a look at Manrega work, which provides cash in the hands for informal work in the rural economy, and if you take a multi-year look, perhaps there is merit to the demand that Manrega work spending and the outlay should increase. Do you agree with that, and what's your overall view on the likely path that the centre will take towards the overall social welfare spending?
Look, I think the thing with freebies is that they're all right as long as we keep our focus on growth. So I would still, I think, and we're looking at the long term for India, I think the challenge is really in any democracy, there'll obviously be pressure on for redistribution. But I think as long as we keep our foot on the accelerator, the growth accelerator, we can do a lot more redistribution rather than focus on redistribution and then see how we're going to finance it. So I think as long as the growth focus remains, and I think to that extent going slow on the deficit is a means, it's not an end in itself, right? The end is growth and expansion of the economy. So I think if the balance of sort of redistributed spending and growth requires a little loosening of the fiscal target, I think that's all right, because we need growth. But I think we shouldn't over obsess with redistribution, because that's not going to deliver despite what it might do for an election or two, that's not going to deliver the kind of jobs and wage growth that are the aspirations of the people. That will only come with growth. So I think I would not obsess too much about increasing redistribution. I mean, to the extent that it's happening with every election, promises are being made and implemented. It's happening at the state level. So at least at the center, I don't think there's any particular need to announce new schemes or gigantic increased allocations to existing schemes. The center should keep the focus on growth so that redistribution can be enabled more sustainably.
Rumki, because this mention of unemployment came up, the CMI unemployment rate for December last was 8.1%. But I want to turn the conversation towards the external environment. And because we have discussed growth, we have discussed taxes. Soumya Kanti has also answered this question around whether it's a cyclical or a structural slowdown, but the impact of what's happening globally, especially in the United States, on the Indian economy and our exports. What in your mind is the impact of America First and Make in America going to be as far as the Indian economy and its growth prospects are concerned?
Siddharth, I have a feeling that given the changes that the Trump administration is bringing in, it will have an impact on trade. It definitely will have an impact on exports in manufacturing that we do to the US. Investments will get impacted because of the fact that there will be a flight towards safer haven as long as there is a speculation of where the trade and investment relations are going to be. Again, there are quite a few announcements regarding technology trade, technology investments, and given the recent announcements that we heard from the developments that we heard from China, as they are coming up with their own technology power, which can actually change the dynamics quite a lot. All these will have an impact on India. We will see the manufacturing exports to suffer, to get impacted. What I believe is this also creates an opportunity for India, because where I see India has strength is the services sector, and I don't think in US will go for many restrictions in the services area. And India has a strong presence and relationship with the US in the services exports, and that is where I think India will actually gain.
Right.
Given that there is a lot of digitization happening, this will ensure that our technology trade and our other services beyond IT BPO, but we will go towards ed tech, fintech,
Right.
and health tech. All these services will probably grow very fast. So quite a few
Right.
opportunities there for us.
Soumya Kanti Ghosh, in this environment, what should India's import duties, tariff policy be? And that is a subject that still remains within the purview of the union budget.
I think every time there is in the budget, there isn't clamor for raising the tariffs. As a proponent of free tariff, I think we should move towards a country with lower tariff rates. But the point problem is that if US is raising tariffs across the board, I think in that case it will make the things little difficult for India. But the good thing is that if I give you some data, during the last time when the Trump was president and then Biden when became the president, I think India's export basket has significantly broadened towards value-added exports. Engineering exports is now one of them. India has also diversified destination in terms of global South-South trade. So I think these are some of the factors which will have a cushioning impact on the Indian exports, even in an era where tariffs could be imposed. And the other important thing is that I just wanted to make a mention to the currency also. I think one important observation regarding the currency is that during the last time when Trump was president, the currency I think depreciated by around 10 to 11%. But when Biden was president, the currency depreciated by close to 29%. In fact, we have seen that during the times of Republicans, the currency actually strengthens. So that is one point which I want to look into. So the recent aberrations in the currency, and Indian currency, I think, is more growth accretive. And of course, it is significantly responsive to US dollar movements, but it's also growth accretive. So once growth comes back, I think there will be a possibility of the rupee actually moving up a little from the current levels, even though currently the scenario is a little bit uncertain. So overall, I think Indian external sector, even though there is some amount of volatility, but my sense is that opportunities are galore, as we have seen in the past, in terms of scaling up exports in value-added segment and diversifying across regions apart from USA and European Union.
One final point on the show, and Dhiraj Nayyar, this is to you. We have also faced a situation of declining capital flows. We've also seen the trend as far as FDI numbers is concerned. So the bigger question, reforms are key to India's economy, and we have seen various iterations of reforms. Is this budget also, perhaps an occasion where Modi 3.0 and its outlook towards reforms in this tenure is also a significant policy statement to expect?
I should hope so, because I think, whereas again, not every reform is a budget matter, but I think the budget is looked at keenly, not just for the spending and revenue numbers of the government or the tax and tariff measures, but also as a vision statement of, where the government is planning to go for the next 4 years. And I think, we have a very different external environment and global environment to what we had 6 months ago. In fact, we have a different domestic environment as well, as you would, in terms of the political economy. The Modi government had lost its single party majority in the Lok Sabha. but it has now come back strongly in the states and Maharashtra and Haryana, so that gives them a certain strength domestically. Externally, we have Trump coming in, plus a slowdown. Yes. So I think there is a great opportunity for reform.
All right, that's a very good point to end this conversation on. Very clearly, multiple things that Finance Minister Nirmala Sitharaman will have to balance in the forthcoming budget. On the one hand, we are seeing certain drivers of the Indian economy being weaker than they were before, and therefore the pressure on the government to address that. But equally, the government's commitment towards fiscal consolidation is something that the markets will continue to watch out for. But the big picture, the reform roadmap and trajectory for Modi 3.0, will this budget be the occasion where a strategy is outlined? That's also one of the key things that we'll continue to watch out for. I'm going to thank my entire panel for their presence on the show. Rumki, Dhiraj and Soumya Kanti Ghosh. We'll see you again, hopefully on budget day. Until then, goodbye.